Today is Monday, March the 30th. One more day left in the quarter. FinViz showed us that the volume was pretty low, and I'm going to show you another volume chart of up and down volume on the New York Stock Exchange that's going to shock you a little bit and make you really wonder what's going on. So advancers to decliners about 2 to 1, which took our stock market breadth indicator up again, just back to the overbought line. The summation index dropped a little bit. It dropped by 143 points. But here's the chart I wanted to show you. Let's look at volume. Look at the volume today. Up volume and down volume. Pretty much one of the worst up volume days we've seen in an up day since all of this really started, which is at the end of February, so a month ago. Pretty pathetic volume, so don't be fooled. Let's take a look at 2007. Let's go back to our McClellan oscillator and see how we've got this point up above the overbought line, and we could churn out a few more. That hasn't stayed above the 200 line in the last 12 months, but that's not all the data that we've got to look at. Let's look at 2007. Let's look at the number of times it stayed, the McClellan oscillator stayed in the overbought line, overbought area, while the market was moving up off of the March 2009 highs. So that signaled that we were on a trajectory upwards, right? Well, let's look at the number of times that it did the same thing back in January. 1, 2, 3, 4 days in a row where it had exceptionally strong McClellan oscillator numbers. And what happened? We had this move up to precede it, and then we had the ultimate drop right down to our Dow Jones low. So be careful. People are saying that the bottom is in. Morgan Stanley said they don't think we're going to see a retest of the lows. I am playing it as if we are going to see a retest of the lows. And today we closed higher than Friday, but lower than Thursday. The volatility index took a decent drop down. That's a good thing. Let's go back and look in time. And we go back to this period here, this ugly time in 2007. And you can see that in the fourth week, we had this beautiful big drop, October of 2008, and then it just moved right back up again. And if we look at March 2009, right in here, the market started to regain its legs with the volatility right here, right around the 50 area. And right now we are looking at 57 area, but it wasn't quite just up and down. Let's take a look at Apple, 254. Pretty nice move. This is the weekly. Let's go back to the daily. You can see that it's higher than Friday, of course, but lower than Thursday, which was 38.2% retrace off of this drop. Where are we? No, sorry, not that drop. It's off of this big move up here. We're back to, we've actually retraced now, not 38.2, but 61.8% back. So it's the inverse of that number. But we also want to start tracking the rebound. And the rebound we track this way by looking at these two. This is a significant point because it's an area that we put a green line in, which showed previous resistance and support on the weekly chart. And where are we now? We are back to, let's get rid of 14.6 because we don't like that one. 23, we're back to 38% coinciding. So this one, these two 38.82%, well, of course they will, because 38.2 and 61.8% coincide, so naturally they would coincide. Um, let's watch that as being resistance. After that, we should have a nice clear move up to this 50% point, which is again an area of support and resistance in the past in December of 2019. The REITs took a big hit today, 5% and 10% in the preferred shares, and I tried to find out why, and I don't know why. I didn't see anything in the news. Caterpillar, really nice rebound to take a bite, take a nibble of the gap, and find itself pushed back. So that is typical. Let's see just how quickly Caterpillar can break through this gap. That will tell you a lot about Caterpillar. If we're looking for other areas where there's lines in the sand, it's probably right in here where you've got support, resistance, support, support. Let's go back on the weekly chart and see if that line plays out a little bit better. No, it doesn't really. Your other one might have been right back here had we drawn one back here, and that's where we stopped today, on that low right there and these two highs. So that was resistance. These green lines are helpful. Doesn't mean you can't step in and buy Caterpillar. I bought 100 more shares on Friday, and today I sold the shares that I had bought with my 165 short calls. I took 162, 161.50 instead of 165 because I didn't want to wait till the end of April. I had gotten most of the premium out of those short calls / premium in the stock, and decided that I would take those 300 shares and I would do 205 short calls, April 205, on the price that I currently bought today. So it wasn't worth waiting till the middle of April, to April the 20th, to get the rest of the $165. I decided I would take more upside and actually make more if I was to redo the trade with today's price and the 205 short calls. Sorry, that was Caterpillar. I'm talking about Home Depot. My apologies. I'm talking about Home Depot, not Caterpillar. Caterpillar, I just bought 100 shares. Let's look at Home Depot then. Here's Home Depot on the weekly, just above. I don't like 23.6 and 14.8. They're really not strong Fibonacci numbers. Here's where we are on a daily chart. We show the SMIs moving up. So there's still strength here. I do believe that we're going for 205 before April the 20th, expiry day here, because that's the bottom of this gap. We've got two gaps. If the market does correct a little bit and test the bottom again, we have this gap for support of 175. That'll be a great opportunity to buy more Home Depot. And 205.64, 205.47, of course, being the top of that gap. AT&T had a nice little rebound today. Why? Because they announced their dividend and they maintained their 52-cent dividend. So that was very encouraging for those of us who buy AT&T for the dividend. Whirlpool up 4%. First time that it's really done anything in a while. It's really been lagging Coca-Cola, up $1.95 to 38, above 38.2%. You know, people who like Coca-Cola and like the dividend, you know, now's the time to buy back into Coca-Cola. This is a good opportunity. There's a gap here starting at $49.95, so $50 where you see some resistance, but that is a whole $5 away. So that's it for today. Let's take a look at one more. Amazon still busting out. The amount of business they could be doing if they could ship every order that they've got. I noticed that my wife tried to buy a pair of running shoes for me on Zappos, and Amazon does their shipping, and they're just not shipping my order. So I'll have to wait quite a while before I get those running shoes. But Amazon is shipping some stuff that is not necessarily related to healthcare. I'm still able to order stuff off Amazon for the hobbies that I have. So there are exceptions to what Amazon is shipping and isn't shipping. It does have extended delivery time on some things because I think they're having trouble getting product from some suppliers. But boy, Amazon is the store of the future, is what I'm trying to say. No, I'm not trying. Anyways, they are the big box of the future. We know that now. S&P, let's look tomorrow. Let's just take a quick look at after hours. And you can see that we ended the day just a bit above and bouncing off the prior day's high, so Friday's high. And we're still trailing above Friday's high and a little bit below, well, just $1.50 above the close. So there's an opportunity for tomorrow. Our new Fibonacci's will be drawn on here tomorrow. And let's see. I am looking for a test of the bottom, but it's going to take some bad news. And that is probably going to manifest itself in terms of corporate earnings. Companies are starting now to announce their earnings dates from the middle of April onwards, and we're going to see some pretty miserable earnings, and that will give the market the excuse that it wants to go back and retest this area right in here. That's what I feel.